Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2025, and we're diving into Meta's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Meta's latest financial performance.
Meta has been at the forefront of AI and immersive technologies. Let's explore how they performed this quarter. Revenue and profitability overview. Let's start with the top line. Meta reported a revenue of $51.24 billion for Q3 2025, marking a 26% increase year over year. John, what are the key drivers behind this growth?
Meta's revenue growth is primarily driven by a 14% increase in ad impressions and a 10% rise in the average price per ad. Their family of apps continues to be a strong revenue generator, contributing significantly to the overall growth.
Despite the revenue growth, the operating margin decreased to 40% from 43% last year. Can you explain this?
Yes, the decrease in operating margin is due to a 32% increase in costs and expenses, which outpaced revenue growth. This includes higher investments in AI and infrastructure, which are crucial for Meta's long-term strategy.
EPAC's impact. Meta's reported EPS for the quarter is $1.05, significantly below the forecasted $6.61. However, there's an adjusted EPS of $7.25. John, can you clarify this discrepancy?
The reported EPS was heavily impacted by a one-time non-cash tax charge of $15.93 billion due to the One Big Beautiful Bill Act. Excluding this charge, the adjusted EPS is $7.25, which actually beats the forecasted EPS of $16.61 from 16 analysts.
That's a significant adjustment. How does this affect Meta's financial outlook?
It positions Meta favorably for future quarters as the tax charge is non-recurring. The effective tax rate would have been 14% without this charge, indicating a more normalized tax environment moving forward.
Operational efficiencies and future outlook. Meta's operational metrics also show positive trends. Family daily active people reached 3.54 billion, an 8% increase year over year. How does this impact their ad revenue?
The increase in daily active users directly boosts ad impressions, which, combined with a higher average price per ad, supports strong ad revenue growth. This is a key component of Meta's revenue strategy.
Looking ahead, Meta expects Q4 revenue to be between $56 and $59 billion. What are the factors influencing this guidance?
Meta anticipates continued strong ad revenue growth, although Reality Labs' revenue may decline due to product launch timing. Additionally, foreign currency is expected to be a slight tailwind, contributing to the revenue outlook.
Strategic investments and risks. Meta is making significant investments in AI and infrastructure, with capital expenditures expected to reach $70 to $72 billion. How critical are these investments for Meta's future?
These investments are crucial as they support Meta's AI initiatives and infrastructure expansion, which are essential for sustaining growth and innovation. The focus on AI-powered experiences is expected to open new revenue streams.
However, Meta faces regulatory challenges, particularly in the EU and US. How might these impact the company?
Regulatory pressures could affect Meta's revenue, especially in Europe, where changes to ad offerings might be required. Additionally, upcoming youth-related trials in the US pose potential legal risks that could impact financial results.